This hourly segment is brought to you by The Real Story with Jeannie Ives and Amy Jacobson. Heard weekday mornings at 11 on AM 560. The Answer.
Now, from the Signature Bank Studios. This is Chicago's Morning Answer with Dan Proft on AM 560. The Answer.
Top of the morning, Dan Proft here. Peter Navarro, Trump's former economic advisor. Beneath the headlines, a strong labor market. That February jobs report, minus 92,000 jobs, was not received well by the street, but Peter Navarro says that's missing the larger story. And he goes through, there was several temporary factors and reasonably cold weather, blah, blah, blah. The general unreliability of these numbers anyway, but, hey, you can't have it both ways. You can't lean on them when they're favorable and dismiss them when they're not. But he argues that the unemployment rate held steady at 4.4%. In other words, Americans who want to work are working. He also cites the break-even job creation rate, which he pegs at like 16,000 jobs per month. Boy, I don't know. That the handle I always had for that was more like 150,000 jobs. But he argues that the number, because the labor force is now growing much more slowly than in previous years, the break-even level on job creation on a monthly basis is much lower than it has been historically. Maybe. The most important story in the report, though, argues Navarro, is not the monthly job count. It's wages and productivity. Average hourly earnings rose 3.8% over the past year, slightly stronger than expected. Manufacturing workers, in particular, are seeing some meaningful gains. Weekly earnings for factory workers are rising at more than 5% annually, reflecting the recovery in industrial wages. And productivity growth is strengthening, especially in manufacturing. Factory productivity has grown at its fastest pace in nearly 2 decades, he argues. One other data point on the jobs numbers before we bring in our friend Jim Perry for further distillation. Data shows foreign-born workers have lost 519,000 jobs over the last year. I assume that in part because many of them are no longer here. But anyway, foreign-born workers have lost 519,000 jobs in the last 12 months, while native-born workers have gained 128,000 jobs. America first. Additionally, federal government employment has decreased by 10,000 in February and is down by 330,000, or 11%, since reaching a peak in October of 2024. Well, that's not bad news. Not that I want anybody to lose their job, but that's going to be a necessity if you have any interest in shrinking government. Sorry to say. Too big. Okay, let's bring him in now for more on this. Pleased to be joined by Jim Perry, who is founder, CIO of Perry International Capital Partners, LLC. Jim, thanks for joining us. Appreciate it.
Thank you, Dan. Good morning.
So is Navarro at least directionally right that don't look at the top line, minus 92,000 in February. Look at the underlying dynamics?
He's not wrong. Excuse me. He's not wrong. I think the economy is actually doing pretty well. I mean, exogenous effects are notwithstanding. There's a lot going on out there. But, the fact that the government is 330,000 jobs lower and foreign-born worker employment roles are down, 500,000. That's pretty good, especially when you think, if you look at sort of the listed stocks out there, I don't know how many there are, but, 5,000 or something. But 80% of the job growth in this country every year comes from small businesses, right? 81, 82%. So Navarro's correct, except that, there's not a lot of government statistics that really support those points of view. So he's kind of just throwing out a narrative out there that's very pro-administration, which is fine. I mean, that's politics. But I think the key issue is, right, I mean, that's what you do. But the point is that, the unemployment rate is 4.4%. And the labor force actually has never been higher, right? Officially, the government says it's 160 million people. Unofficially, it's probably more like 180 million people. So the labor force in this country has never been larger. It's also never made more money. Back to your point about wages, average hourly wages are over 3.5%, and manufacturing wages are sort of, up 5%. So there's a lot of people working, and there's a lot of small businesses that are being created. I mean, one of my economic buddies, Torsten Slock, works for Apollo, and he put out a report over the weekend that said, the creation of small businesses, the organization and registration of small businesses is higher than it has been in 20 years. Right? So there's a lot of small businesses that are hiring because, broadly speaking, the economy is actually doing pretty well. It sure doesn't feel like it. It sure doesn't look like it, and it's not across the board, right? I mean, the affordability issue, if the Democratic Party is going to pick up, several dozen seats or 30 seats or 50 seats in the midterms, it'll be because the narrative of affordability for the middle class strikes a chord, and it just may, right?
What, if any, indication do we see that AI is starting to have an impact? I was reading something about some 2,500 Amazon workers who just got the email notice that their services are no longer required, sort of en masse, and a lot of them were apparently talking about how they essentially trained their AI replacements that made them redundant. Do you have a sense that sort of dynamic is starting to occur in enough places that it will be impactful?
It is occurring, and it does make headlines, right? It's not only Amazon, but, Oracle laid off 2,000 people or so, or 3,500 people. Morgan Stanley announced on Friday that they were laying off, sort of 2,000 people. But those are small numbers, and they do make headlines, and, of course, it's on the front page of every newspaper. But I think that, you're not getting really good government data anymore. And, we had a shutdown in November, and we had really bad weather in January, so Navarro's not wrong. And then, of course, Operation Epic Fury, there's not a lot of competent people out there right now with missiles flying around. So I think we're in the transitory period with AI. I do think that you look at a company like Walmart, right? So Walmart is like the second largest employee in the country, right? Employer. And they had a net no decrease in jobs, except their AI business has increased by, something like 50,000 people, right? So you're getting a redistribution of wealth, and I think there's a retraining of wealth. I think the AI revolution is definitely trending toward higher productivity and higher wages. But I don't think it's going to hurt unemployment that much. I think 4.4% unemployment is far, far, far from recessionary yellow flashing lights. I mean, you haven't had a recession in this country with unemployment below 5% in, 3 decades or something like that. So I think that if people are looking at these job headlines and thinking that there's an imminent recession, I would say that summary, that assessment is incorrect, at least for now, right? If we get gallons of gas at $5 a gallon, that's a different story.
Well, will that occur? Qatar's energy minister warning that war in the Middle East could, quote, bring down the economies of the world, unquote, predicting that all Gulf energy exporters will shut down production within weeks and drive oil to $150 a barrel if there's not some stability brought to the situation with Iran and in the larger Middle East. That seems to me, based on where we are 9 days in, a little bit Chicken Little-ish, but the street seems to me a little bit Chicken Little-ish with respect to this campaign in Iran right now as well.
Yeah, I mean, we can talk about 4.4% unemployment and Peter Navarro all we want, but the elephant in the room is Operation Epic Fury. This is really what's going on. I sent a note out last night about 5 o'clock yesterday afternoon. oil up in Tokyo, right? And it traded to $119.50 a barrel, right? It was 65 a week ago Friday. So when you see oil go up 100% over the last 50 years or so, 60 years, 70 years, you've gotten a recession, right? So this disruption that we're getting right now is probably as bad as anything that we've seen since really when Nixon supported the Yom Kippur War in 1973, and then the Iranian Revolution under Carter in 1979. So this is kind of where we are right now. Is it temporary? Probably. Are we going to get past it? I think we will. The market itself, if you look at everything in the market, credit spreads, interest rates, commodity prices, even underlying strength in the stock market, investors see things in the Middle East improving in a month, right?
Yeah.
Still, even today. Now, it doesn't feel like it, and you're going to get an oil minister out of Qatar who will say something like that. And there's some bad stuff going on over there. I mean, last night, a ballistic missile, not a drone, a ballistic missile, big one, was fired from Iran toward the Incirlik Air Force Base, which is a NATO U.S. Air Force base in Turkey, right? So Incirlik, just a little quick backtrack. Turkey and Greece share the island of Cyprus, right? And a missile hit Cyprus last week, a week ago today, right? So effectively, Iran has attacked NATO. And under Article 5, that means that really the Turkish army could kind of march into Iran and NATO would support them, right? So there's a lot of
I mean that's
I know.
That's a little bit far fetched, but I mean it's what's technically possible and what is plausible in the real world are two different things.
Correct. Well, what is probable and possible and very real is that one single little drone lobbed into the Kuwaiti oil fields is enough to have production stop, right? And it has.
Well, right, and as we were talking about earlier in the show too. I mean, I understand Trump was not happy to see Iranian oil fields on fire either, but he probably thinks about
the new Ayatollah.
yeah, but that's sort of built into the price. But I mean, he's probably looking at those oil fields the same way he looks at Venezuela's oil production, say, well, that's the way to rebuild the country when we improve the conditions on the ground there. So he wasn't happy to see that, but the other piece of it, and this has been addressed over the weekend by the administration, so it'll be interesting to see if this dulls the blade and in terms of the anxiety on Wall Street, is, will the U.S. be able to ensure that commerce continues through the Strait of Hormuz and shipping lanes are free and safe? And, both Hegseth and Chris Wright, the Energy Secretary, seem to indicate that that's going to happen, and it is starting to happen and is going to happen in short order. So maybe that will calm some fears.
Yeah, I think that's right. And again, that's the narrative, and they should be saying that, and they're probably not wrong. But, the devil's in the details. And the details are that, the Operation Epic Fury has probably knocked out 90% of the capabilities of the Iranian ballistic missile operation, and probably 80% of the drone capabilities, if they know the number of drones. How many drones do the Iranians have? Is it 10,000? Is it 100,000? Is it 250,000? We don't even know, right? The point is, it only takes one drone to be shot from the shores of Iran onto a ship in the Straits of Hormuz for this thing to be a big problem. And that risk does exist, right? So it takes one drone. That's all it is. And we have not mitigated the risk of one drone on one oil tanker in the Straits of Hormuz yet. Can they do it? Sure.
If this does go more or less according to the Trump administration's plan, and 4 weeks from now we're looking back at this, well, without difficulties, but the situation is stabilizing and we can look forward. What is your expectation for the rest of this year, and how much has that, in terms of market performance, and how much has that changed in the last week?
Right. Good question. I think the big issue for the S&P 500, for example, which sort of down 90 points again today. It was down 100 overnight. Is that you can't get out of this mess, right? It goes on for more than a month, more than the 2 months, and into the summer, right? So the real story is the firepower of the U.S. military going to be strong enough to get a regime change in Iran? And that's an open question. I think it should be able to happen, but there's a couple of really big issues that have to change and have not yet. One being is there's no protest really in Iran from the Iranian people, right? And the big reason for that is they don't have any guns, right? So, the religious police and the Republican guards, these guys have all the guns, and until that stops, you're not going to get any kind of a regime change. So you have to see that happen. I was talking to a buddy of mine in Miami the other day, and he's a very smart guy, 9 languages and sort of MIT and stuff. Married an Iranian girl and speaks Farsi, right? Speaks Persian. And he said you'll know the change in Iran when the Iranian people decide not to use the Arabic language anymore and start speaking Persian. And that has to happen because the religious guys don't want it to happen. It happened in Turkey, right, in the 50s with the great Ataturk, right? There's all kinds of languages over there. He created a national language. So when you see Persian being spoken in Tehran, that means things have changed. And that ain't happening this week, that's for sure.
Well, so a bit back to my larger question. So, I mean, are you changing your strategy for the rest of the year? Are you rebalancing your portfolio now, or what are you doing?
I have, over the last couple of months, reduced my equity positions marginally. I'm at about 30% cash right now and about 15% gold. And most of my portfolio in the equity market is defense stocks, which made an all-time high on Friday.
Yeah.
Right. And also the equity rally here really is broadening out. I mean, Caterpillar Tractors at an all-time high, and Boeing's at an all-time high, and McDonald's is at an all-time high. So, I think the stock market, the narrowness of the stock market that we were worried about, 3 months ago and 6 months ago with the Mag 7 doing all the heavy lifting, that's broadened out. So that's kind of a very positive thing for the market.
That's a very positive thing to hear. That despite that Chris Kobzinski video of eating that Archburger or whatever the hell that McDonald's made an all-time high, I thought that would have tanked the company. That was so cringeworthy.
Yeah, you just kind of go,
oh my God, what is he doing? Hey, Chris, hire an actor, for God's sakes.
That's like me getting a video of myself playing golf. You just don't do that.
James Perry, founder, CIO, Perry International Capital Partners. Jim, thanks as always. Appreciate it.
Thanks, Dan. Have a good week. I'll talk to you later. Bye-bye.
Take care now. Jim joined us on Chicago's Morning Answer.
This is Chicago's Morning Answer.
Your show keeps me alive during the week. There's nobody I'd rather listen to between 5 and 9 in the morning than you guys.
On AM 560, The Answer.
The following is a paid political announcement.
I'm Casey Klebeck, and I'm running for the United States Senate. Our country faces serious challenges